welcome to another edition of Ardent TV. I am Thomas Traplin. I'm the marketing manager here at Ardent Mortgages, and I have with me
Joseph Riccardi. I am the principal broker here at Ardent Mortgages, and today, what's our question? What's our topic for today, Tom?
Well, we're going to talk about second mortgages. We're actually going to recreate a conversation we had many months ago, back when I was still learning and getting to know the industry. We're going to talk about what is a second mortgage, and we're going to explore the whole thing. We're going to make it super simple so everybody can understand. So the question is, what is a second mortgage? How does it, when you don't have any clues to how the industry works, what is a second mortgage and what does it mean?
You can't tell from looking at me, but Tom and I work out together, and we had this conversation at the gym while Tom was working on his agent course back in
December.
I think it was before December even. Yeah, around December.
It was around the December mark because I finished it around like New Year's, like almost on the mark.
So, and Tom's background again is mostly on the marketing side, but being in the mortgage industry, it's very crucial.
It's pretty important to know some of the terminology.
Exactly.
The way things work.
So we were having this conversation. He said, why would anyone, the first question, why would anyone get a second mortgage? And we'll get into that.
Yeah.
But my answer to him was, well, you have to understand what a second mortgage is before you get that. So the first thing
sometimes you have to not be afraid to ask stupid questions.
That's absolutely, that's actually a really great point. Because this question can seem, for someone in the mortgage industry who's been in the mortgage industry for many years, their first reaction is going to be, that's a really strange question to ask.
What do you mean you don't know what it is?
So how can a property have more than one mortgage on it? Well, there's a fixed amount of equity in a home. When I say fixed, at any given moment in time, the markets are always fluid, right? Values of properties, as we all know, are going up and down. So
I thought we were going to make this simple.
I'm trying. It's not that easy of a question to answer without getting into some of this. So with your available equity in the home, you can have liens up to whatever percentage of the value of the home the lenders will lend against.
So let's use some numbers to make this a little easier. Let's say you have a $500,000 home.
Okay.
You have a first mortgage up to $300,000.
Sure. You have a $300,000 first. Let's say your value of your home when you bought the home was $400,000, and now it's up to $500,000, and you have some options. You need to borrow some money for whatever. You can increase your first mortgage to X dollars, however much you need to increase it by, if you qualify. If you don't qualify, or if you want to get a line of credit, or for whatever other reason, if you'd like to get secondary financing, all that secondary financing means, or a second mortgage, is that it's registered after the first mortgage. Okay? So a second mortgage in that case there is any mortgage registered after the first mortgage was registered. So in this specific scenario, let's say you needed $30,000 for debt consolidation, any of the items that we talked about in our previous...
all those
good
and bad reasons we discussed before.
And the bottle pops. But any of the reasons in the previous video, you can go get your first. You keep your first for $300,000, and you add your second for $30,000 behind it. Now your total registered charge against the property is $330,000 between two mortgages on a $500,000 property. Or let's say it's $100,000, just so I can do the math in my head right now. While the 3 over 5 is, I can't do it. What's 3 over 5?
We should cut this part out.
Yeah, we're going to cut all this.
Let's
leave it in. It's fine. Let's say it's $100,000 second, so I can do the math in my head, and then you're at $400,000 total charge on the $500,000 property. You're at 80% loan to value, and that's what that means between the two charges. The first one is $300,000, the second one is $100,000. Now you have a total of $400,000. Sure. We have to leave all of that mistake in, or otherwise that won't make sense. So that's staying.
I feel like we're dumb. This should have been really easy math.
Well, 5 over 3.
Oh, it's $300,000 is 60%.
Yeah.
$350,000.
So it's 66% if it's 330. We did it.
330. Yeah,
don't cut anything, so everybody knows that we didn't.
We can do math in our head.
You know what? For all you listeners at home, it's a very, very different experience when you're on the other side of the camera here to try to do that quick math in your head. So don't judge. No judgment. All right. So what happens when a borrower defaults? If you have two mortgages, how does that go down? Elaborate on your question a little bit. Help me out with this.
So what happens when you can't make the payments on your first mortgage?
On your first mortgage.
You lose your job, you run out of cash, and you're like, I can't make payments on my mortgage.
And you have
mortgages. You have two.
You have two mortgages, and he's defaulted on your first mortgage.
Yeah, what happens?
So there's no definite answer to what happens to this. All the lenders treat things a little bit differently. Some will allow you to go a certain while into default. I never recommend going into default. That's not what I'm suggesting here. But always make your mortgage payments, right? But different banks approach this different ways, and we'll go over one specific type of scenario. Anytime you fall into default on your mortgage, and let's apply it back. Let me rephrase and ask a question here. Why are you asking this when you're talking about second mortgages? What's the difference in your question between having a first mortgage that you're defaulting on and having a first mortgage and a second mortgage and you're defaulting on the first? Why does it make a difference for you, the borrower? Why are you asking?
Well, the reason we were asking before is when we were exploring this prior to knowledge. The question was like, how can somebody have two claims to the same debt, right?
And
both have a claim against the house. So what happens?
So it's not the same, and that's a better question. And I think this is exactly how the conversation played out.
This is pretty much how it went.
Yeah. So it's coming back to me. So you can't have two claims. So that's why there's a priority, first and second.
That's what I was getting at.
Exactly. Now I understand. So if you're in default of your first mortgage, the first mortgage takes precedence over the second mortgage. Either of the two mortgages could force power of sale, could execute on any of the methods that they have to collect on the mortgage, and that it would all be in the mortgage contract and explained to you by your mortgage broker and explained to you by your lawyer. So you have multiple sources where they tell you the risks involved. Yeah. So if you're in default of your first mortgage, just to go back to the answer, if you're in default of your first mortgage and you have a second mortgage on title, the first mortgage, let's say, goes power of sale, sells the house, $500,000 home, $300,000 first, $100,000 second. We're going to use that same example. The home sells through the bank for $420,000. There's let's say $40,000 worth of legal and realtor fees on the transaction.
Sure.
The first mortgage would collect after the fees, after the expenses, and then anything left over would go to the second mortgage. That's why there's a higher interest rate and more risk for a second mortgage to lend. They mitigate that risk by increasing their interest rate.
That makes a lot of sense. That was the question that I had. So why would somebody need a second mortgage? We kind of went over this a little bit.
And we were jumping around.
Why would,
To go back to what we said earlier in this video, any of the reasons that we talked about in the previous video. Maybe I want to do one of these again. Maybe we should put a link to the previous video right here. That's what we're going to do. Link to the previous video right here. Those are all the reasons why someone would need a second mortgage. So again, maybe you don't qualify for a refinance of your first. Maybe you don't qualify for a line of credit through your bank. A line of credit from your bank would technically be a second mortgage as well. But anytime that you can't increase the first mortgage. Okay.
So how do you qualify for a second mortgage? Is it different than the first one?
Again, we're simplifying, and this is a common misconception.
Broad strokes.
With second mortgages. What does second mortgage mean, right? It's just a mortgage registered after your first mortgage. So how do you qualify for it? In a lot of cases, exactly the same way as you qualify for your first mortgage. When we're talking about a private second mortgage, that's different qualifications altogether. And again, every single one of the lenders are going to have their own policies that they work with to qualify you for the second mortgage. And again, it's up to your mortgage broker to explain to you maybe why they took you to one lender versus another lender, because again, maybe you can't prove your income, and there's only a certain set of lenders that will lend to you with that repayment capacity. You're going to pay a small premium for that because of it being a little bit more difficult to qualify for, and that's why you might go to a specific private lender, right? Or maybe you have pristine credit and you just want a line of credit. I'm working on a deal right now for a borrower who wants to reinvest a large sum of money with actually our investing partner again. And
that's a name drop again.
Yeah. And with that borrower, they have a credit. They're looking to take out $250,000 on a $1 million property, as an example. Mm-hmm. And their qualification process will be exactly the same as the banks, because we're actually taking them to the bank to qualify. We have a couple deals like that right now.
So I guess the last part, we kind of mentioned it a little bit. What kind of fees are we talking about when you go with a second mortgage? You mentioned the higher interest rates. Is there anything else that comes along with trying to get one of these?
Again, just because it's first or second position doesn't mean that the fees are higher or lower. Then everything fee and rate related boils back down to how difficult it is to qualify for the mortgage. The higher the risk, the higher the rate, the higher the fees. So again, those borrowers that I was talking about earlier, where they have the pristine credit and they're going back to the banks, in that specific case, the lender is paying the legal fees, the lender is paying the appraisal. There's no cost to them to do this deal, aside from the prime plus 0 or prime plus 0.5% line of credit that we're getting for them, right? That's that example. Now you take the other example that we talked about with the client who can't prove their income or doesn't debt service the deal, needs to do a prepaid second because they're underwater in debt, and this is an effort to save their credit. You're going to be paying for that risk as well, or you're going to a higher loan to value on the property, or any of these reasons. Anytime the risk from the lender increases, the rate increases proportionately.
I think that clarifies things. It sure answered my question when we were discussing it back at the gym.
We're going to condense this into 10 minutes on this, and our conversation there, I think,
probably went for an hour.
Yeah.
I had a lot more questions back then.
Do we have any other questions about this?
I don't know. I think that's it. That's it for me anyways. If anybody else has any more questions about, second mortgages, first mortgages, whatever, want to shoot us a question, definitely we are open to it.
Yep.
Comment down below.
And I don't know if I said this in the past, but any other ideas for questions and videos that you'd like to see, please go ahead and post in the comments. We'll
be happy to answer them.
Absolutely. All right. Well,
thank you again for joining us on this episode of Ardent TV.
Yep. We will
number 3.
Chat again soon.
Yeah.
No, I don't like that ending. Let's find a different one. We'll get this figured out. Don't worry.